Hello and welcome. Today's video is a continuation of our Tax Education for Childcare Businesses informational video series. Today's video will be discussing key opportunities in your taxes.
The information contained here has been prepared by Civitas Strategies Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited.
This is session 2 of the video series of Tax Education for Childcare Providers. Today we'll be addressing key opportunities for your business in filing your taxes. Let's start off with an overview and then do a deep dive into tax opportunities. The key topics we'll focus on today include your business use of home, deducting food, transportation, and also depreciation. First, the business use of home deduction. The time-space calculation is so important for home-based childcare providers. When you figure out your time-space calculation, you are able to deduct your business use of home for all expenses which you use for both your business and your home. Now, how does this process work? This slide, the steps outlined here, provides an overview. We're going to go into each of these key steps one by one in future slides. If this is your first time learning about time-space calculation, here's the main takeaway. You're going to figure out how much space in square feet your home is. Then you'll figure out how much space in square feet your childcare program uses in your home. After that, you're going to figure out how many hours you are working for your childcare program in a given year. This not only includes the hours that your program is operating, but it also includes the amount of time that you spend working to keep your doors open operationally, even when the program is closed. You're going to find portions by dividing the amount of space that you use for your childcare program by the total space of your house. And then you're going to find the portion of time in the year that you spent on your childcare business by dividing your hours used for your business by the total number of hours in a year. When you multiply these two portions or percentages together, you're going to find your time-space percentage. If that sounds like a lot, take a breath. We'll go through each step one at a time. Now, before we dive into the calculations, let's talk about a key concept: exclusive versus regular use. Unlike any other type of businesses, childcare programs based out of homes can include spaces that are used regularly but not exclusively. Let's determine the difference between exclusive versus regular use. From my experience, the majority of childcare programs have regular use spaces in their home. This means that a space is used for both your childcare program and your personal purposes, right? So if you only have one kitchen in your home and that kitchen is used for providing food to the kiddos in your program and to your family, including yourself, that's a regular use space. At the same time, if you have a second bathroom in your home that usually isn't used for your childcare, but let's say you have a large childcare program operating out of your home with staff, and let's say that your staff member gets to use that second bathroom. Perhaps that second bathroom's upstairs and and the staff member is the only, your one staff member is the only person allowed to use that bathroom, but the kiddos all use the bathroom downstairs. That also is a regular use space for your business because you are allowing someone from your childcare program to use that second bathroom, right? So regular use means your childcare program uses the space at least once a week for a few hours, once to twice a week. And it's a space that's also used by your family. This is different from exclusive use because exclusive use space is 100% used for your childcare program. This means that you never use the space unless you are working for your childcare program. And your other people in your household or your guests absolutely never use the space either. It is only for your childcare program. It is very important to be truthful about exclusive space because as a home-based business, the IRS has the right to inspect your home. So be sure to be honest and also fair to yourself insofar as what you're reporting as regular use versus exclusive use. Let's go through examples next. Some examples of exclusive use. If you have a basement that is completely outfitted for your childcare program, and it even has a separate entrance for families that is only used for childcare, there's no one in your household that has any reason to go down there when your childcare program is not operating because the program is outfitted, the space is outfitted for your childcare program. That's an exclusive use space. Another exclusive use space is if you have a home storage area, maybe a closet, that is only used to store supplies for the childcare business. If only childcare business supplies are stored in that area, that's also an exclusive use space. Now, regular use might be more common for some childcare providers, right? So if you have 2 spare bedrooms and those 2 spare bedrooms are used for nap time, then those 2 spare bedrooms would be counted for regular use. Even though it's only used for children's nap time, it is used for the childcare program. And because it's used regularly whatsoever, it would be counted in your business use of home time-space calculation. Even if you only use your living room once a week for a certain lesson, that is a way for you to count your living room and your time-space calculation as regular use. Now, as a home-based childcare provider, when you incur home costs, they may be deductible for your childcare business. Eligible expenses can be either partially or fully deducted. We want to be sure that we're knowledgeable about this because we want to find the Goldilocks zone when we file our taxes, right? We want to optimize the eligible amount of deductions of business use of home that is rightfully due to us, right? And at the same time, we want to make sure that we're not over-reporting, or in other words, reporting more costs as an expense deduction than we would otherwise be eligible for, right? So let's first look at exclusive use. Let's say you're a provider that has outfitted their basement for their childcare program. It's 100% exclusive, and you nor anyone else in your household uses that space outside of for purposes of your childcare program, right? In that case, if you had some improvements to make in that space, for instance, one of the tiles was chipped or the drywall got dented, the sink faucet in your basement needed some repairs, right? If you're making repairs only in the area that is exclusively used for your childcare program, that's fully deductible. That means that 100% of the cost of that repair can be an eligible business deduction. If you installed a child-sized toilet in your basement, which was exclusively used for your childcare program, that's a 100% deduction. Your business liability insurance is a 100% deduction too. For family home providers, please be aware if your home childcare program has a special insurance policy which loops your liability insurance in with your home coverage. Be sure to either ideally ask your insurance provider to separate the cost of the liability from the cost of insuring your home so that you can deduct the liability 100% and you can deduct your home insurance costs using your time space percentage. Now let's get into examples of partial deductions. So that means that a repair is made to your home, but you cannot expense the cost 100% on your taxes. You can only partially expense the cost as a business deduction by using your time space percentage. These are regular use area costs. So let's say in your living room, the drywall got dented and you wanted to repair the drywall. If your living room is a regular use area for your child care program, then the cost of repairing that drywall, you can apply the time space percentage to and use that portion of the cost as an eligible business deduction. If you repave your driveway that all of your families use, they pull into to drop off their kiddos, right? Repaving your driveway doesn't only benefit your business, it also benefits you, anyone else that lives in your household, and any of the guests that you personally invite over. And so you can use the cost of repaving your driveway as a partial deduction by using your time space percentage. Replacing all the windows in your home is also a partial deduction, but it's a bit of a tricky one, and that's why it's in here. If you replaced 100 every single window in your home, right, what you'd need to do ideally is if you have any exclusive use areas, then of course any windows in the exclusive use area could be deducted 100%. However, the windows in the rest of your home, if you had a regular use area, then you would apply the time space percentage to the regular use area windows. So you would have to ask the window installer to give you a breakdown of the costs per room, right? If you have a trickier situation and you have maybe more of an open concept home where one of your windows connects to a space where your child care program operates, or for whatever reason it's fairly difficult for you to break down your time space calculation of your windows for whatever reason, you could take the cost of the whole house and use your time space percentage to deduct the cost of the entire window replacement fee, right? The point of this slide is to say that if you do repairs on your home, be sure you're not shortchanging yourself. Think well about, are these repairs affecting my child care business at all? If the answer is yes, then is there a case to use my time space percentage to reduce my liability on my taxes? And of course, if it only impacts your child care business, such as cosmetic repairs to an area that's only used for your child care business, then that's 100% deductible, assuming it's an exclusively used space for your child care program. Let's talk about how to calculate your time space percentage. So first, you're going to determine the square footage of the area in your home that you regularly use for your child care program. Again, regular use could mean it's used all day for your child care program, and after the kiddos go home, your family and you use it for personal reasons. It could also use that the space is primarily used for personal reasons, but your child care program or facets of it use this other space occasionally, meaning at least once or twice a week or a few hours a week, right? You're going to find the square footage of this area and add all of the square feet together, because you might be using more than one room, to determine, you should be if you're providing them food, or because you make sure to count every area that you are in to ensure your child care business is running properly, right? Even if for whatever reason you have a cooking area where the kiddos aren't allowed in, if you are in the cooking area providing food and preparing food for your enrolled kiddos, then that is a space which you can count, right? So you're going to add up all of the square feet of all of these spaces to determine the area of your home that you use for business. And that's a length measurement and a width measurement. So using a tape measure, make sure you get the measurement of the length of one wall in your space and the length of the other wall in your space, the longest wall and the shortest wall, and record each measurement in feet. Next, you'll multiply the length measurement by the width measurement to find your square footage. So if a space is 13 feet long and 10 feet wide, 13 times 10 is 130. So that space would be 130 square feet. Make sure to measure every space and to add up the total square footage of every space to determine in total how much square footage of your home is regularly used for your childcare. Step 2 is to figure out next the total square footage of your whole home. Before we dive into this, let's talk about what can be included in both the total square footage of your home and the square footage that you can count for your childcare program. Childcare businesses fall under a very specific area of tax law, and you can actually count certain spaces of your home in square feet that probably is not counted by your town. For instance, if you were to buy or sell your home, the amount of square footage which might be listed if you were to search your home online wouldn't necessarily match up with what you can count. If you have a deck, which means some decking extended from your home, then that is an area that you can measure the square footage of. This is advantageous for many childcare providers because often children will play on decks in nicer weather. Do not count patios. Patio infers a ground level surface without decking that is not connected to your home. A patio might be some stones on the ground. There's also most likely no fencing or walls around a patio, right, or rails. So decking can be counted, patios cannot. Front porches can be counted because decking material, whether that's wood or some plastic material for construction, is attached to your house and connects to the ground out front, right? And if you have a front porch, it most likely has railings or some other safety enclosure, right? And so that front porch may be counted for your time space percentage as well, both for your total square footage of your home and also the amount of square footage which you can count for your childcare program if your kiddos use the space. Again, this is advantageous to you because if you have a front porch, it is, if your kiddos are using the front porch to enter and exit your home, then that is an area which you can include in your time space percentage as regular use space. Garages also should be included, both in your total square feet and the amount of space that is regularly used for your business, if that is true. So if your kiddos occasionally spend time in a garage on your property, that can be included in the regular use and also included in the total, right? Make sure also to include hallways. Hallways should be included in your square footage. And again, that's usually advantageous because regular use is common for hallways for childcare programs, not all programs, but many. And so again, make sure you're using these areas both in the total and also if your kiddos use the space, even occasionally, it should count toward your time space percentage, okay? So once you figure out all of the spaces that your kiddos use, now figure out the whole square footage of your home. Again, don't necessarily trust go by your property tax documents or looking your home up on Zillow. It can be a good starting place, but you probably want to verify the measurements yourself. Every town has different regulations around how home square footage is calculated. So again, childcare businesses have an extremely unique position in tax law, and you can measure the spaces yourself to maximize your time space percentage. Because if anything, it is likely that whatever you look up online might undercount if you look up your real estate listing online, it might undercount your square footage compared to what you can report for your childcare business, okay? So when you figure out your square footage of your home for your childcare space, you divide that by the total square footage of your home. So if you use 500 square feet of your home and your home is 1,000 square feet, then the percentage is 50%, right? 500 divided by 1,000 is 0.5. Phew, we finished the space portion, right? Now we have to look at time, okay? Next, we have to think about how many hours your childcare space is open per week. So let's think about how many program hours do you have, right? That's an easy one. For how many hours in a typical week is your program open? Also, right, we want to consider how many hours do we spend in our home maintaining our childcare business. You know, many childcare providers identify as women, and a lot of women tend to undercount their experience and their labor, right? You know, this is not the time to undercount your labor. Think about all of the hours that you are spending time working toward making your childcare program a high quality business, right? Think about time that you spend preparing food, time that you spend preparing curriculum, even time that you spend online on your computer in your house researching different things like curriculums or activities, activity planning. Of course, if you are doing the bookkeeping yourself as far as tuition fees that you're taking in and bill pay going out, all of that is time that it is labor, it is hours of your life that you are spending on your business. And this is the time to count it as such, right? Any hours that you are spending on your business should be counted. So you're going to think about in a typical week, how many hours are you spending on your business outside of when the program is open? If you're unsure, you might want to use an app to track your time, or a log, even if you write it down. For a week or two, just to see the true totals, because it might be more than what you'd originally give yourself credit for, right? So ultimately, you're going to find the number of hours that you're spending per week and multiplying it by the number of weeks in the year, or if your program is closed for certain weeks in the year, multiply it by the number of weeks that your program is open. If you do close your program for certain weeks in a year, do you have that week off for vacation? That's amazing if you do. If you don't have the week off for vacation, are you doing anything for the child care program, even if the program is closed? If so, you can multiply the total number of hours that the program is open by the total number of weeks in the year that you are open. Calculate the number of weeks in the year that the program is open, right, by the number of hours that you're spending per week typically. And then however many weeks that the program is closed, think about the number of hours you're spending on the program during that time and multiply the number of hours that you're spending by the number of weeks that the program is closed. Then you'll add those two numbers together. Let's go into an example. Let's say that your business is open for 10 hours every day for 5 days a week. And let's say that you spend an hour beforehand and an hour after the program is open on your childcare business. That's 12 hours a day, 5 days a week. And let's say that every year you close for 2 weeks on holiday, but that during those 2 weeks, even though the program is not open, you spend 5 hours each week, or 10 hours total, maintaining the childcare space and participating in other operational activities. You would multiply 12 hours per day times 5 days per week times 50 weeks, and that comes out to 3,000 hours. And then you want to account for those 10 hours that you spent working toward business operations while the program was not operating during those 2 weeks. And you'll add those 10 hours to come up with 3,010 hours. Next, we have to think about how many hours there are in a year. We figured that part out for you. There's 8,760. So divide the number of hours that you spend working on your childcare program, or that your childcare program is operational in your home, and divide that by 8,760. In this example, 3,010 divided by 8,760 comes out to 0.344. When you multiply that by 100, you get your percentage, 34.4%. 34.4% represents the amount of time that your home is used for business purposes. So we've come up with two percentages, right? The percentage of square feet in your home that is used for your child care program relative to the total space in your home, and the percentage of time that your home is used for your child care business relative to the number of total time or total number of hours in a year. You're going to multiply those two percentages together in order to obtain your time space percentage. So in this example, remember, we had a provider who was using 50% of the space in their home for their childcare business, and that same provider applied 34.4% of their time in a year to working on their childcare business or ensuring its success operationally, right? You multiply those two percentages together, so we'd have 0.5 by 0.344, and that comes out to 0.172 or 17.2%. This is the percentage that you can apply to your business use of home for your in-home childcare services. This percentage can be used for grant fund reimbursement and deductions for your annual tax filing. Now let's backtrack a bit. Remember exclusive use space? That means 100% for your childcare business. If you have a space that is 100% used for childcare, it is only subject to the space calculation. You must be able to prove and document that the space is exclusively used for childcare. Now, let's move on to another tax opportunity, food and meals. The cost of food for children enrolled in your care is fully deductible. There are multiple ways to report these costs. Now, if your own children are enrolled in your care, then you cannot deduct the cost of their food. If you have staff who you are also providing food to, their food is only 50% deductible. There are a few different ways to deduct the costs of food for your enrolled children. The first is actual expenses, and the second is standard rate. Family child cares have the option of using either actual expenses or standard rate. Centers must use actual expenses. To deduct the cost of food for the enrolled children in your care, using the actual expenses method, you would need to keep track of all the food expenses, including the receipts. The pro to this method is that it includes all your costs, and so you know that you are able to deduct or count for deduction every penny that you spent, nothing more and nothing less. The downside to this method is that it comes with greater scrutiny and recording burden. It will take you more time to add up all of these costs, and you will also need to keep all of your records and calculations on file because the IRS has the right to examine these records. Now, there is a standard meal rate. Using this method can simplify record keeping. This provides an optional standard meal and snack rate that family daycare providers can use to compute the deductible cost of food provided to eligible children in the daycare, rather than using actual costs. The rates that you see on this slide are Tier 1 CACFP reimbursement rates for family child care providers in Wisconsin. If you use this method, you can use the standard meal and snack rate for a maximum of 1 breakfast, 1 lunch, 1 dinner, and 3 snacks per eligible child per day. This is different from the CACFP reimbursement allowances. The CACFP reimbursement allowances typically allot for 2 meals and a snack, or 2 snacks and a meal per day. So if you are a family home child care provider electing to deduct the cost of food for your enrolled children, using the standard meal rate, you can use up to 1 breakfast, 1 lunch, 1 dinner, and 3 snacks per eligible child per day. Now, if you use the standard rate, you still need to keep track of the meal types, number of meals, and children enrolled in your care and their attendance. There is some easier record keeping, and you can still deduct non-reimbursed meals and snacks. But you still need to keep track of the names of each eligible child, the dates and hours of attendance, the number and types of meals served for each child. You heard me mention the CACFP earlier. The Child and Adult Care Food Program, also referred to as the CACFP, is a federal program that provides reimbursements for nutritional meals and snacks to eligible children and adults who are enrolled for care at participating programs. So if you enroll in the CACFP, then your program may receive reimbursement for up to 2 meals and 1 snack per enrolled participant per day. Reimbursement is based on the type and the number of meals served. You can report all of the reimbursements under the income and then deduct food expenses in full. This is the preferred method. Another method which you can use is the netting method, which requires netting the amount reimbursed against the food expense. So if the food expense is greater than the reimbursement received, then you can deduct the excess as a food expense. However, if the food expenses are less than the reimbursements, then you should report just the excess income as revenue. This is not a preferred method, and it's probably going to be easier if you report all the reimbursements under income and deduct the food expenses in full. Let's dive into another section now. The tax opportunity, which is presented to you by accounting for transportation. Transportation costs can be deducted as they relate to the regular course of business. Some typical expenses relate to taking children to and from school, field trips, medical facilities. You can also include trips to buy business-related supplies. So transportation must occur over the regular course of business or operationally preparing for regular course of business. They can be directly related to children's transportation, or they can be your business-related transportation. It is very important to separate personal and business transportation, and we'll dive into how to do that. Now, when you're traveling for business-related purposes outside of when your child care program is operating, most frequently you're probably picking up supplies for your child care business, right? If your trip is for both personal and business use, that's okay. If the primary purpose of your trip is for business, then it's deductible. So if you go to the grocery store with a long list of supplies for your child care center, and you also happen to do grocery shopping for your home while you're there, that is a perfectly acceptable business trip, right? If you are at the supermarket doing things primarily for your family, and you happen to pick up one item for your child care business while you're there, that is not a business trip, right? Most likely you might be going to the grocery store several times a week, right? And if that's the case, maybe it's easier for you to make a list of things that you get for your business every week and ensure that one trip every week is primarily for business, right? Because then you're able to calculate your mileage to and from the grocery store, from your home, if that's where you're departing from and returning to. And then in this example that I just outlined, you're able to deduct the cost of that trip every week. Let's talk about how we'll do that. So the two methods to use for transportation deduction on your taxes is actual expenses or standard mileage rate. If you'd like to deduct using actual expenses, you'll need to keep track of every cost for your vehicle for both personal and business use. And you'll also have to maintain proof of payment for all costs. The pro is that this includes all the costs of your vehicle. The con is that this will require a much greater recording burden for yourself and greater scrutiny by the IRS. It will also elicit greater scrutiny by the IRS. What the actual expense method is doing is saying, here's all the money I spent on my car, on gas, on parking, etc. this past year, and I'm going to itemize how much was for business and how much was for personal. And then what you're able to do, if you get a major repair to your car, say that repair costs $4,000, you're able to figure out what percentage of time in that year your car was used for business purposes, and then itemize that percentage of the repair expense as a deduction on your taxes. The standard mileage rate is a much easier way to go about deducting transportation costs, and generally it's much more worthwhile, especially if you do not transport children during the day. So if you are a family home child care provider who does not provide much, if any, transportation for your enrolled children, then you almost certainly want to use the standard mileage deduction because it's going to take much less time and energy for you to calculate the expenses. All you need to do is track your business-related miles using a simple log or an app. So in the example I gave earlier, if you just know that you're doing a business trip for your grocery store every Tuesday night of the year, then all you have to do is maintain a log with your number of miles to and from the grocery store every Tuesday night. And then you multiply your number of miles by the standard mileage rate. Very important to know in 2022. 2022, we saw 2 standard mileage rates. This is very uncommon, right? So the first part of the year, January 1st through June 30th, 2022, the standard mileage rate was 58.5 cents per mile. So if you happen to have an exactly 2-mile trip to the grocery store from your house, 2 miles there, 2 miles back, that's 4 miles. You'd multiply 4 miles by 58.5 cents to figure out your reimbursement for that week, that mileage, right? Now, in the final 6 months of 2022, so from July 1st through December 31st, 2022, the standard mileage rate increased 62.5%. I'm sorry, 62.5 cents per mile. So definitely be mindful of that as you are calculating your business mileage this year for tax year 2022. And finally, let's talk about depreciation as a tax opportunity. Concisely, depreciation means a reduction in value of higher cost assets over time. Expenses can be deducted potentially over years, which can create a near-term tax liability, which could surprise providers. Let's go into some special rules to accelerate depreciation. There are 3 special rules for depreciation that can help you deduct your depreciation faster. First, there's Section 179 depreciation, which is allowable for tangible personal property, such as office equipment, furniture, vehicles, and most other assets that are not buildings or improvements to your building, including a home used for business. There is one catch, however. The item needs to be used for your business at least 50% of the time, 50% or more. If you are a family child care provider who wants to use Section 179 depreciation for an improvement for your home, you will need a time-space calculation that shows 50% or greater business use. For a vehicle, such as a van transporting children, you will need to show 50% or greater use based on the total miles driven for a year. The second special rule is known as bonus depreciation. In 2022, you can deduct 100% of certain assets in 1 year without an upper limit on the total amount you can deduct. To qualify for bonus depreciation, the item needs to have a useful life of 20 years or less. So this doesn't apply to your home because your home has a useful life of 20 years or more. It also needs to be used for business 50% or more of the time. Importantly for family child care providers, an expense such as a driveway paving that meets the criteria of having a useful life of less than 20 years may not qualify if the provider's time-space percentage is less than 50%. One exception, similar to Section 179 depreciation, is that there are separate rules for vehicles. For vehicles under 6,000 pounds, you can expense up to $19,200. For vehicles over 6,000 pounds, but less than 14,000 pounds, there's no limit. Just like within Section 179 depreciation, you need to use the vehicle at least 50% of the time based on the total miles driven, and the amount of depreciation must be adjusted by the business use. Bonus depreciation will continue to be 100% through the end of 2022. This was a special, fairly recent, and temporary tax law that was put into place. And 2022 is the year where you can deduct 100% of certain assets. This goes down to 80% in 2023. and it will end completely in December 2026. Every year after 2022, you will have less that you can depreciate within the given year. So if you had some big expenses this year, and as a family child care provider, if your time space percentage is greater than 50% and you had some big expenses this year, it is certainly worth considering looking into learning more about bonus depreciation for 2022 tax year. Finally, the third special rule is known as safe harbor for small taxpayers. This rule comes out of the IRS tangible property regulations and allows providers to deduct repairs or improvements to the business location that are the lesser of $10,000 or 2% of the unadjusted basis. The unadjusted basis means the value of the property less the value of the land. For example, let's say you have a child care center that is worth $350,000 and the land alone is worth $50,000. You might be able to see this on your tax bill. The unadjusted basis would be $300,000 because $50,000, the worth of the land, minus the total property worth of $350,000 is $300,000. 2% of the unadjusted basis would be $6,000, meaning 2% of $300,000 is $6,000. So an improvement like adding an awning that was $5,500 could be deducted in 1 year because it is less than $6,000, or in other words, less than 2% of the unadjusted basis. For family child care providers, you would need to account for the time-space calculation. With all three of these rules, it is important to note that state limitations can vary. So depreciation, as described above, may only apply to your federal tax return. This flowchart here walks you through whether you can depreciate a certain asset. So first, is the expense over $2,500? Any expense, even part of an expense, such as a mixed personal use item, should be considered. Is the cost for a repair? If the repair is being made, it needs to use similar materials and have the same functionality. It cannot add value. So an example we hear about sometimes is if a family child care provider wants to renovate their kitchen and update their countertops. Formica countertops have to be replaced with Formica countertops or something similar in quality in order to be counted as similar materials, right? And same functionality without adding value. If you have a Formica countertop and you replace it with high-end quartz, that adds value to your home. So it becomes more complicated, and depreciation most likely would not be eligible in that case. Is it equipment or land improvement? If so, you can use Section 179 or bonus depreciation in 1 year. Is it a facility improvement less than $10,000? You could use the safe harbor for small taxpayers to depreciate in 1 year. And anything else can be depreciated per IRS guidelines if it is eligible.
Additional resources for early care and education can be found at the Wisconsin Early Childhood Association or WECA website. If you are not a member of the Wisconsin Early Education Shared Services Network, you can click here to learn about business training and support it offers. If you are ready to join the Wisconsin Early Education Shared Services Network, you can also click here to join